Good morning, traders. Today is July 7th. I'm doing this update to highlight where we are in this correction in the markets using my advanced TT pivots Fibonacci modeling system. This is an advanced artificially intelligent modeling system. It learns as price progresses and makes decisions as we go forward. It's based on Fibonacci Price Theory, and I'm going to explain to you what's going on here. We're going to start with the SPY. And we're going to show the similarities between the SPY and the QQQ. So as we go forward, I want to focus on these white blocks here and here. These are the major trend reversals. Think of them as major tops and bottoms. We have a potential setup back over here, which is marked as a major bottom right now. This will adjust as we get a confirmed pivot down here. These pivots are playing out in real time. We do not have a confirmed pivot with the Fibonacci system yet identified as major or minor. Minor pivots are identified here with these little blocks, and then intermediate pivots are identified with these cyan and magenta arrows here. So the way we look at it is this is the major pivot low to major pivot high, which is our primary trend. And then we have, hypothetically, a major pivot low to a intermediate pivot high. Then we have an intermediate pivot low. Then we have an intermediate pivot high. Then we have an intermediate pivot low. Then we have an intermediate pivot high, followed by another intermediate pivot low, followed by the ultimate high here. So this is the actual structure of price moving forward. Each of these minor waves consist of a Elliott wave count, which we could attempt to reverse engineer if we wanted to. Hypothetically, A, B, then A, B, C, D, E, then potentially, or A, B, C, D, and then we have an E down here, then an A, B, C to the peak. Then we have one single wave down here to this lower pivot. Then we have an A, B, C, D, E, F, G up to here, which would really be an A, B, and then C, D, and then this would be A, B, C up to the top. Then we have a single pivot down here. Then we have another wave up here to this, which is again A, B, C, D, E up to the top. Then an A, B, C pivot down. Then we have an A, B, C pivot up. So the way we would identify this is in reality, we had a move here, which is very clear to see, a B move here. Then we had an A, B, C move up to here, which is wave 3, the biggest wave here. Then we had a bit of a correction, and then we had our D wave up to here. Now, where we're at in the downtrend is that we've got a minor, an intermediate pivot here, an intermediate pivot here. So we have a trend that goes like this to the downside, which is why we're so important. We have a pivot move to here, then a pivot move to here, intermediate. Then we have a new intermediate that's likely to form right here, coming up to an intermediate in yellow. A yellow means this is our last major intermediate pivot. It's not yet confirmed. It could change to a magenta color or a cyan color, likely will change to a cyan color or magenta color, excuse me, as we identify this pivot here. So as we spread this out and drag it down, you can see that we've got these pivots in place. Now we're coming down here to these lows, but we do not have any confirmation of any pivot rotations. Each one of these is intermediate price pivots. So they will potentially identify as some structure going forward. Right now, we don't have them. We are at new price lows. We have not established new price highs. It is very likely that this move will continue. And it is very likely, if we take a look at the overall structure of the chart, we have this A, B, C, potential D, potential E. This could be just wave 1 to the downside. Or it could be a completed 5 wave. We don't know yet. We do not have any confirmation of a sideways or trend reversal yet. We are in a downtrend. We are moving lower. but we do not have any confirmation of a trend yet. We would need to see price get above these highs here at, this is the SPY, so this is going to be 314, 315. And then eventually, ladies and gentlemen, it's got to get above these levels here. So understand that we're looking at the 352 to 365 roughly level up here before we're going to see any real strength to the upside. So this is where we're at in the market. We're in a downtrend. Oops, dragging the chart around. We're in a downtrend. We haven't got any real confirmation of any real base yet. This becomes the real critical level to the downside, this 275, 274 area, and we are consolidating in this downward trend. Now, if we take a look at the QQQ, we're going to do the same thing. We're going to try to highlight what's going on in the markets. Assuming this loads up. Oh, I'm already in the QQQ. All right, so this was the QQQ, I guess. Let's go back to the SPY. And let's do the same thing. So that last chart was the QQQ. Now let's do the same thing here on the SPY. You can see we've got our pivots. Our white pivots indicate major pivots. We've got a little bit more definition over here on the SPY. So again, we've got our major move from here to here. We've got our minor move from here to here, which again, this is more intermediate. And this is very clear in terms of price rotation, a good solid 5-wave structure. So there's our 5-wave structure, A, B, C, D, E. Now we have our structure coming down here, which is the downward price structure going from A to B to potentially C, which has already been identified with this white trigger here. And we're looking at the potential of a E wave right up here. Now this C wave must stay below this level here. So understand that any type of upward movement in the markets right now must stay below this level in Fibonacci theory. So we need to see the markets stall here and move lower or rally back above this level, which would be the end of the wave. This would be a downward correction of an A, B, C correction, stalling and moving higher potentially, or stalling in this area below this yellow line here, and then beginning a new downward cycle, which would be potentially a new D wave like this, coming up potentially to here, or a little higher, and then beginning a new downward wave, likely down to these targets right here. So understand that we're in a sideways congestion channel. We've got a long way to go before we see any real basing, bottoming, in my opinion. The actual structure of price is such that we are in a consolidated downtrend. The Fibonacci Price Theory is showing us that we're in a downward cycle. We need to get above on the SPY here, this 409 level, potentially to get a lot higher. Once this 409, 410 level is broken to the upside, then we may see an upward trend start to begin. As long as price stays below this downward channel, this 409, 410 level, then we are looking very seriously at downside price trending. We are getting some basing down here near this 355, 356 level, but Fibonacci projection levels are telling us that we're looking at the 306, the 330 roughly, and the 357 level as downside target projections. Now let's go back to the QQQ, because I started with this and I labeled it as the SPY, and I want you to understand that where we're at with this level here is the QQQ must stay. This is A, B, C. This becomes our base wave here, And it must clear, the QQQ must clear this level in order to begin a new upward movement, a new bullish trend. So we came close back over here. We stalled. We failed. We're now weakening. We could see it dance around this level, but because this is an ABC move, and I'm reading this as a potential ABC move, wave 1, wave 2, potentially wave 3 moving down here, I think we're looking at possibly quite a bit of downward trending, and I would not become overly aggressive at buying or trying to load up on any bottoms right now. We do not have any confirmation of a base or a bottom. We're still in a downward trend. We need to stay cautious and let this play out. We need to actually see this change direction, base and bottom, and really move above this 316, 317 level to begin a new upward trend. So there you go. That's the general market consensus using Fibonacci Price Theory and my Fibonacci Price Modeling System. I'll keep you updated as we move forward. But right now, again, my recommendation is stay cautious. Don't get overly loaded up on any positions. This looks like capitulation. In fact, let's take a look at gold just for the heck of it, because I know a lot of you follow gold. And where we are at with gold is, let's try to take a look at the longer term picture here. Okay, so we have a major peak, a major bottom, a major peak, the potential of a major bottom setting up right here. We can see that we've moved from these lows to these highs, and we can see an intermediate structure. We have a intermediate high, intermediate low, tightening intermediate high, tightening intermediate low. This creates a flagging formation across here. You can see it across here and across here. Really, it comes about like that. And then we had this breakout rally, and we're now back below this intermediate low level. So you can see here that we had this intermediate low here coming up to a major high. So we're really counting this as 1, 2, 3, 4, 5, flagging out. In a scenario where we had this would be considered a chaos or a flagging wave. Now, currently what we have with gold is a big breakdown that's targeting these lower levels here. We're in a breakdown of trend. This is a daily chart. So you can see we have this 1, 2, 3, 4. This is ultimately going to be potentially 5 to the downside. We will identify this as we have some sort of a confirmed pivot here. We don't have that confirmed pivot yet. Upside potential is showing 1857 to 1970 to 1994. Critical support in this area we would want to see in a broader picture. Remember, the broader picture is, let me go to weekly and I'll show you. The broader picture for gold is that we have a very big cycle trend setting up. And when you look at these major peak, major bottom, major peak, major bottom, then we come up here, intermediate peak, intermediate low, a couple of them. So you see 1, 2, 3, back up to this peak. Okay, so we essentially need to see gold hold up above these intermediate low levels. So here's our last major peaks here, across here. And then we have this double bottoming set up here, which I've already drawn a line on. I will draw another line to show it to you. So you've got this intermediate, intermediate. This is all intermediate, and it's going right across here. So ideally, ladies and gentlemen, we're stepping our way forward and higher in gold. You can see from this 2015-16 level, ideally, we need to see gold hold above this 1661, 1670 level. Sorry, 1681, 1700 level. And it should continue to anchor higher. So this intermediate low here becomes very critical support for gold. We're seeing a lot of downward pressure, which I believe is capitulation. You can see here this downward pressure on this chart. I believe this is capitulation as traders believe the Fed is losing control of the narrative and the global markets and inflation. And what's actually happening here, ladies and gentlemen, is we're seeing a bit of a capitulation of the downside where it's a bit out of control, and then eventually fear is going to settle into the markets, and this will rally back to the upside, stall, and then potentially move higher. So this is where we're at with this move here in metals, I believe, as we're seeing real capitulation. The U.S. dollar, very strong. U.S. markets likely to hold up better than many global economies. I've highlighted this many, many months ago that this unwinding was taking place. Overall, this is extremely healthy for the markets and metals. It's a broad unwinding cycle, but as fear starts to take place and traders start to move into safe havens, metals should begin to bottom. Remember, we're looking at a major peak back over here, this new high price back over here. This sets up an intermediate ABC move to here. This is going to likely be an ABC correction, maybe retesting these lows. You can see we've got downward targets down here a bit lower. Could stall out at any moment, but in reality, this becomes a major peak with a correction moving higher. And long and short of it, the longer term picture, when we take a look at the actual base from 2015-16, we have an ABC correction here that stalled out as a flagging formation across here. So right here to here, there's our flag coming across this low here. It's actually a little bit lower. Right down in here. There's our A, B, C, D, E breakout. We've got this same type of setup here. In essence, we've got almost an exact same setup. We're coming straight across these highs. And then we've got this formation across these lows, which will likely continue to play out. And what we have here is an A, B, C, D. The next move is just as I drawn. The next move is a recovery, and then a rally, and then a rally. There you go. That's the update for now. I'll keep you updated. Follow my research on Twitter. Follow me on YouTube. This is going to get very, very interesting over the next 6 to 12 months plus. This is one of the biggest opportunities of your lifetime if you follow these market trends and use some of my proprietary modeling and trading systems. All right. Thanks a lot. Bye.